interest rates, inflation, stock market, wherever the heck you want it to be in 90 days. So again, let's not let the daily executive orders, the daily this, the daily that, distract you from what you should be doing. If you're going to be distracted by everything, you're not going to make any forward progress. You're just going to, frankly, raise your cortisol and go crazy. So again, as I said before, and we'll remind you again, let's just take a deep breath. Let's assume that you and I don't understand the chessboard. We don't understand the bigger play, and thus we shouldn't be distracted by single moves. So let's take a breath and see what's going on. But that said, we have entered what I would call a trade war. President Trump apparently has initiated a 25% tariff on Canada and Mexico, ex-Canadian oil, which I think is only 10%, and a 10% tariff on China. But there's lots of things going on that I think we'll just watch and play out. Number one, will there be more exceptions? We have seen the lumber industry, the housing industry, the steel industry, lots of things kind of raise their hand saying, hey, we need a little help. We need a little love. Will they be randomly paused? Could we get an order that says, hey, we've decided there's been enough movement. We're going to delay this till March 1st. I'm just making this up. They could be delayed or paused or whatever just as quickly as they were introduced. Number 3, will they be retaliation? The answer is yes. But here's something that might be kind of wild. So I haven't read the executive order. I don't know what's going on. Frankly, don't care. But I just wonder, is there something called an escalation clause? What is an escalation clause in this context? It might be something that says, hey, we put a 25% tariff on X. If said party retaliates, we take a 25 to a 50%. Just some kind of natural ratcheting up of this going on. Next, seems like we've taken our southern border in China. Where is Europe? Is Europe going to get some of this? Will there be tariffs on chips? Right? Electronics? Will there be taxes on steel, aluminum, copper? All of these things. And then finally, what is going to be the impact on consumer psychology? That's a big deal. What is going to happen to consumer psychology if this plays out uninterrupted for months to come? That is the big question mark. Again, it will be interesting to see how the chessboard looks in 90 days. I expect anything that happens today will be very different than in 90 days. Could be worse, could be better. Who knows? But what you and I need to be doing for the next 90 days is keep moving forward. We don't need to be distracted by what is going on in DC day after day after day. We have bigger things that we are trying to do in our household. That is where our focus should be. So let's talk about PCE. We talked about it a little bit in the Friday financial wrap-up with Ty, but given this is the first daily financial news since PCE was released, just go over them very quickly. Headline in PCE did in fact rise. So again, a trend is formed from 2.4 to 2.6. PCE core stayed flat at 2.8, meaning no up or down. There is hope based on the fact that the 3 and 6 month annualized number are below the 12 month. But again, I think that is hopeful because remember what got us last year was a January adjustment to insurance and other things. So let's not, hang our hat on a 3 or 6 month thing. As you will see in a moment, next week is going to be full of Fed presidents' talks, and they will be market moving. They will move rates. They could move stocks. They could They could do lots of things. The thing I read this weekend from Michelle Bowman, again, Michelle Bowman gets kudos for the first Fed president to vote against the 50 basis point cut. It was not a unanimous decision. She was the lone dissenter. She did say before yesterday, so this was Friday, I think, rate cuts are still expected this year, but future moves should be cautious and gradual with time to assess data. AKA, my words, not hers, no March rate cut. There you go. Something else we got on Friday was pending home sales. Remember what I have been calling for quite a while now is 2025 to be worse than 2024. Near as I can tell, I am the only analyst calling that. I have not seen anybody else call sub 4 million existing home sales in 2025. I feel like I am by myself on an island. And frankly, I'm feeling pretty good. I kind of like this island. It will be legendary to be right that early. But what did we get for pending home sales? They fell 5.5% in December. Not only did pending home sales fall 5.5% in December, they also had nearly a record 16.2% of pending homes fall out of escrow. That is actually the third highest number since 2017. So if pending home sales were down that big and cancellations are up that big, what does that mean for January sales? January closings? No bueno. Not good, in my opinion. Shout out Lance Lambert at Resi Club. If you haven't been to Resi Club, go check it out. Resi Club Analytics. He put out a tweet from Allie Wolf. Allie Wolf is a excellent analyst. Somebody you should follow. She really focuses on new construction. Shout out Allie. She highlighted 10 things that are happening likely in Southern California. I will go through them quickly because, again, I think this is understanding how the kind of real estate market will react in Southern California to the devastation of the fires, both in the short term and in the long term. Some of these calls are like, hey, guys, this ain't going to be over for a while. Number one, demand for rentals will skyrocket. Absolutely. For sale inventory is going to get tighter. People will consider leaving. We are starting to hear more and more people were underinsured and they do not have the resources to rebuild. So what happens in that scenario? A lot of them will take the check, X mortgage, scrape the lot, and sell the lot. That's just the unfortunate reality of not having the funds to rebuild the home. The SoCal market will start to institute construction that reduces fires. I don't know if you guys saw this, but there were some older homes that used to have like sprinklers on the roof that could be turned on in case of fire. We will see things like that. Insurance costs will undoubtedly go up. Insurance will be undoubtedly more difficult to get. Demand for construction labor will go up. Material costs will go up. Fire resiliency will be improved in tech. And then finally, preferences for homes not around fire risks will grow. So again, very much it's skewing supply, demand, very much inflationary, very much more migration and the like going on. Let's talk about next week. Next week, we got a lot of Fed presidents talking. We got some critical jobs and employment data. We will go through that. So Monday starts off fresh. I think Bullard, Fed President Bullard speaking on Monday. We also get auto sales and ISM manufacturing. Tuesday, we start to ramp up the Fed speak with 3 Fed speak. We get our first JOLTS report. Remember last month's JOLT report surprised to the upside for about 300,000. I think there's a chance, again, it surprises to the upside. The estimate is a repeat of 8.1 million. Wednesday gets the peak of Fed speak. We get 4 scheduled Fed speakers. We get ADP report, private payrolls, and then we will get ISM services. Thursday, we have 2 Fed presidents. We will get weekly unemployment claims and continuing claims. Remember, both surprised to the downside last week. Finally, on Friday, we will get one Fed president, and the big number of the week will be the all-important employment number. Estimates are for 175,000 jobs added. Last month was a barn burner at 256. Remember, last month, the unemployment rates shockingly went from 4.2 to 4.1. It is expected to stay flat at 4.1. Let's shout out Christine. Christine joined school yesterday, or actually the day before. Christine, thank you for joining school. Remember, folks, school is where you need to be if you're starting or interested in real estate investing. 360 plus people going in the same direction, 67 cents a day, 6 different groups, accountability groups and masterminds. Time to join. It is the place to be. If you are a Costco member and you were afraid of the strike, it has been averted. Apparently, there is a tentative deal in place, so no strike at Costco. Don't know if you guys happen to be basketball fans, but that is my favorite sport, and I can't believe the Dallas Mavericks traded Luka for a brittle AD. If you don't know basketball, it's okay, but I can't believe the Dallas Mavericks traded a generational talent for AD. If you're a Laker fan, congratulations. You stole Luka. This might be the biggest trade since the Lakers got Lou Alcindor or Kareem Abdul-Jabbar. Crazy. I can't believe the Mavericks did that. I can't believe it. Anyways, I digress. Sorry. I read an interesting tweet that shows that some general partners, GPs, and syndications are true scumbags. True scumbags. You know that I've had a particular distaste for lots of GPs who overpaid, did bad deals, no skin in the game. They've lost LP money, which this has been going on for years. But I think some GPs have gone true scumbag. Apparently, there are some GPs that are now raising money from new LPs to buy the debt of their old deals at a discount, completely wiping out the old LPs. Can you imagine the kind of scumbag that would find that as being okay? Oh, I know those deals are bad, but let me go get this new money so that I can crush this old. How can you sleep? How is that okay? Seriously, karma is a bitch, and yeah, it's coming. That can't be okay. What else do we have to talk about? Oh, the closing thought. It looks like the office market is starting to percolate. Don't know if you saw this, but it was reported by The Real Deal that New York City office demand is finally back to normal pre-pandemic. Office demand jumped 25% in Q4. 25% in New York City. In fact, national demand is up 12%. So what might be happening? Well, kind of feels like work from home might be actually happening, but I digress. So that's what I got for you today. It is the daily financial news. If you are still watching this and you have not subscribed yet, help a brother out. Hit that subscribe button. We are obviously on this slow march to 100,000. It is no secret. I would love to hit that someday. Feel free to like, comment, share. It's all good. But at the end of the day, just smile. Just smile. Have a good day. All right, everybody, take care. Later.